Good morning, traders. This is Ken Calhoun with ForexOnFire.com, and we're going to go over some of the most volatile trading setups so you can learn exactly what technical signals to use, as well as how to drill down and identify both pivots and breakouts and breakdowns using several different pairs. And we're going to be looking at how you can set up your charts to quickly show you where these signals are in each day's trading. Now, in this chart, you can see we've got a cable update with the pound to the dollar. Nice sell-off in today's session, right? You can see we've got a sharp move down. Our MACD still shows that we are still on a downward trend, though this would be a great place for profit taking off the 19,800 bottom or pivot that we've seen with this lower tail in the candle. Note that yesterday, again, some things are what we call gifts to traders. This is a real obvious pivot level at the 2, and you can see that sure enough that was the short-term high in this pair, as it has sold off since. This would be a great place for what? For profit taking, because the average trading range, again, if we're combining our Eastern and Eastern signals with our Western technicals, you can see that average volatility or average trading range has been exceeded in today's session. So this would be a great place to take profit, and we see two opposing green candles here. Now, that's one of the things that I wanted to share with you to start with, is how to set up your charts for currency trading, or how to at least add this as one possible setup for those of you who've been trading the Forex spot market for quite a while now. Note that we have Bollinger Bands, we also have our MACD, and that's it. I don't add other technicals for this bird's eye view. This is a 5-day chart with 60-minute candles, ideal for identifying short-term trading opportunities and setups. One of the particularly useful techniques that I have found works extremely well is trying to figure out which currency pair is most volatile. This is the top level look that I will take as I scan through different pairs to see where the volatility is. You can see not much here in the euro to the dollar. If we flip down to, say, the pound to the yen, that's even worse. Not much volatility in that particular pair. And we can take a look at the dollar to the yen. Looks like a bullish cut pattern, may have a short-term upside breakout over the 120.6 later, but still not much net volatility. Look at the pound to the euro. That does also show a sell-off as we have in the pound to the dollar. But all things considered, this is the strongest chart pattern of everything that we can see. And main point is that this is likely a near-term pivot, or a place where I would be looking to exit. If I were in this position, I would be exiting at least 2/3 of an open position right here, and not initiate another trade unless we dropped under this 19,800 level. So this would be a good place for profit taking. Let's take a look at a even closer chart, and this is a 15-minute intraday chart. And in this you can see I've got the RSI, and note that I've added the ADX as another indicator. One point that I wanted to make is that you should not use the default levels. I use a 7 period on each of these two, because that gives us a slightly tighter curve fitting and shows us those early reversals even faster than using the default periodicity settings, which I believe are 22 or so, and that's far too slow for what we need to be able to identify in these moves. Now, what do we see here in terms of our short-term trades? It's still a nice downtrend. This would be a great place for profit taking. Initiate another short position if we lose support here. One of the things that I like doing is quickly flipping back and forth between the two, and I superimpose this here so you can see. Now let me close this up here in size. This is today's price action. This is a 5-day chart with 5 days worth of moves. And again, this is a good example of the type of indicators or type of setups that you want to use to identify where moves would be in our different FX pairs. Now, if we're going to look at swing trading, and again, that's for intraday positions. If we're going to look at swing trading, we want to identify pairs like this. For example, this is what, the Kiwi to the dollar, the Australian dollar to the US dollar. This is a nice, strong, obvious uptrend. This would be the type of chart pattern we'd look at for a swing trade. This would not. The pound to the yen would not, right? I would not swing trade this. I would not hold a position in this currency pair overnight, because there's no discernible trend. If we look at the pound to the euro, same thing. This would be a place to not initiate a new position and exit if you are in, because it is in the middle of the trading range. Now if we look at the euro to the dollar, this would be a good place for a swing trading short move if we lose support down at this level, right? Because we can see a bear cup consolidation. This is a cup and handle pattern, right? And if we see further large red engulfing patterns as we lose support, that would be a great position or a great signal to initiate a new position for a short to the downside, right? So this would be okay for a swing trade. You're starting to see the difference. I want you to take what you've learned from equity trading and from the various techniques that you've learned over the years and apply it to your FX pairs and see where the trading opportunities are strongest. The dollar to the Shiffy here, you can see, again, these are inverse pairs. You can see the same thing. Bullish cup consolidation, so a cup and handle and an upside breakout, right? Pretty obvious when you see these pairs. The great thing about these pairs pattern, folks, is that they are repeatable, they are observable. You have classic Western trends. You have intraday volatility patterns like this that are super to work with. The main caution is to avoid patterns that are choppy, that do not have discernible trends like this. The pound to the yen. You can see there's no trade here. I would not be trading this. Why would you trade that when there's much better opportunities in, say, the cable with the pound to the dollar, or even the euro to the dollar to the downside? So just a quick introduction to some of the types of technical signals that you'll be learning about in future videos here. This is a brief introduction, and where it all starts is scanning for where the volatility is and knowing what technical signals to use when to help you initiate a new position, as well as know when to exit or take profit when, as in this example, the pair has moved to the average trading range or slightly beyond it and is starting to show some initial reversal candles. This would be a great place to exit or take profit in this position and not initiate a new one unless it takes out new support to the downside. Anyway, Ken Calhoun, ForexOnFire.com. Hope all your trades are successful, and we'll be learning more in future editions. Thanks a lot, and goodbye.